Today we are going to have a live webinar on healthcare industry, which has been conducted by CMIB, the Institute's uh, Industry and Business Committee. We have with us our first speaker guest, CA Neeraj Jaiswal ji. He is going to enlighten us on the topic of healthcare, revenue recognition, and financial management in hospital. Talking about CA Neeraj Jaiswal ji, he is a fellow chartered accountant with 25 plus years of experience in healthcare industry. He is presently the CFO of India Medicova Group. He is in charge of 24 functional hospitals, two under construction units, and 13 fertility clinics, and also one captive offshore IT facility. Medicover has presence in around 17 countries. He is also a pioneer in IT implementation and in interface of equipments with HMS, creation of financial and clinical dashboards for CXOs and medical teams. He is a diploma in cyber law from Indian Law Institute. He is also a representative of his hospital at the Association of Hospitals of Eastern India. He has also served as a youngest member of the insurance subcommittee of Bengal Chairman of Commerce in year 2003. I'd like to welcome CA Neeraj Jaiswal ji. Over to you, sir.
Good morning, everyone. So I'll start my presentation. I believe I have an hour or so. So there are two subjects. So I'll take two in separately. So let me share my screen first. I hope my screen is visible
Yes,
to
yes,
all
it
of
is.
you. Just a minute. I'll go to the first slide. So it's a typical subject for most of the CAs when you join healthcare. Revenue recognition is the foremost things every day you'll be juggling with. And apart from the financial management, which you is like you have to live with it, you can't escape when you are in healthcare industry, which is very critical business we are. So I'll take you through how we recognize what are the challenges and nitty-gritty of the subject. So in order to understand the subject of the revenue recognition, I'll take you through. First, you have to understand kind of hospitals it is depending. The revenue recognition whole process is depending on the size of the hospital. Mostly you can categorize the hospital into 3 or 4 sub categories, which is like on the basis of funding, a public owned hospital, generally we call a government hospital, non-profit hospitals, which are run by the NGOs or the charitable trust, and for profit, which we mostly see in the most part of and every nook and corner of any small city or big city, which is a private hospitals. On the basis of size, we say that it's a small hospital, which is roughly around 50 and 100 bedded. Medium, which is mostly, which is private hospitals are of that size in India, 100 to 300, and large, which is a little bit bigger, 300 plus, goes up to 1500 beds sometimes in India. Mostly 300 to 500 is a large hospital, you can say, and few hospitals are there which are larger than that. Managing each hospital require different kind of skill set, and basis that your size of the volume and the revenue recognition process changes. And basis on the treatment provided is a general hospital, which is a typically all kind of where you provide many services relating to cardiology, other is or specialty hospitals where a single specialty hospital like specific to cardiology, specific to kidney care, or specific to dental care, or specific to eye care are there. These are the specialty hospitals. And teaching hospitals are none than our medical colleges. And there are smaller clinics. So in a special smaller clinics, which you can say dental clinics or other, or a doctor's private clinics who is having a multiple or IVF clinics. So those are clinics. Or on the basis of levels, there are multiple levels of the hospital. We say as a level 1, level 2, level 3. We call for like so these are for the basis of the medical facility, equipment, infrastructure. So like you say a neonatology, there is a level 1 neonatology. So probably you'll not be having various primitive cares will be there. But level 3 neonatology pediatric center will well equipped. It has most modern equipment, and it can save a babies of weighing up to 650 gram or less than that. So that is a level 3 of neonatal care. So those are basically on the critical care. So all these factors will impact when you are going for the revenue recognition process. So apart from this, which we have discussed about the type of hospitals, size of hospital, then here is a more important part is what accounting system or hospital management system you are working upon, or how mature it is, how process driven it is. It depends on the revenue recognition process. So hospital management system or HMS is also an important factor, which is a key for recognition of your revenue and accounting, the challenges it can put you in a problem or it can solve your problem. And apart from that, desirable top management, how your top management wants the data, how they are wanting to process the whole management system, what is their requirement. If there are people at top who wants more and more information, you have to cut through multiple layers of your revenue into different slices and present it as a part of the management process. Suppose if you are a you're listed company, your requirement will be different. So that's is the desire of the top management, which drives the revenue recognition process. This is a very things which are very important. I've highlighted in a bold, and things which are like is not very key are not highlighted. Another factor is the competition around the unit. If you are very competitive in a market where many players are there, you have to see that they are putting on many challenging situations. You a data analysis, and you have recognized your revenue in a very proper manner. You can cut through into different layers and then understand which department is working properly, what your competition is offering. So you will be put upon to recognize your revenue in a very detailed manner. Otherwise, people will a smaller unit or bigger unit even. If there's a less competition, we have seen or people go for a very basic revenue recognition only for the preparation of balance sheet and then chalo tax file kar lete hain, that's it. But if there is a competition around, you're forced upon to analyze your data in a very detailed manner. Then another is a business practices followed. Like if what kind of practices you follow, you have a keenness to more and more data driven, whether it's a more management driven practices, doctor driven practices. So all those people will demand data on. If your doctors are very keen to understand their contribution to the revenue, how much they are contributing, they will demand many data. So you have to fulfill their needs also. Apart from that, this definitely a government regulations will impact your revenue recognition, the accounting standards, etc. in any business. Unfortunately, healthcare do not have any accounting standards so far. It's still a large. There are so many hospitals around India, so many listed entity, but unfortunately, there is no accounting standard. So I'll request the ICSE management to look into it and devise a accounting standard, because industry is already grown. If you've seen the real estate industry, there was no accounting standard, but real estate industry has now accounting standard. So this industry requires accounting standard. So I'll pitch for it. And if it is there, it will make life easier for the accountant. So in absence of an accounting, what happens? Anybody is free to account for as per their whims and fancies. And when reporting the revenue, there are challenges in this industry working so many years, I understand. Had it been a proper accounting standard, we will be able to prepare more crisper data, and it will be more useful for the users to analyze those data. So apart from the government regulations, I will harp upon one regulation, which is might be people who are joining from the Maharashtra and understand. Most of the hospitals in Mumbai and other part of Maharashtra, they are covered under Bombay Public Trust Act. The Bombay Public Trust Act requires, so accounting is done under Bombay Public Trust Act rather than a Companies Act, where most of the hospitals are incorporated. A few hospitals are there under the Partnership Act also, where smaller doctors go for the partnership among themselves, where 2, 3 doctors they participate in as a small hospital. They take one or floor of each and they do their practice. So under partnership, the requirement of reporting is different than the Companies Act, and so is the Bombay Public Trust Act. So one of the nitty-gritty I'll harp upon the Bombay Public Trust Act is that in a typical accounting, a doctor's services is recognized as a, like when you go to hospital, you get a bill. So your bill is divided into bed charges, pathology charges, and doctor charges, which you get. So most of the hospitals recognize the doctor charges as their revenue because it's part of invoice. But Bombay Public Trust Act require that you have to contribute 1% of your revenue to indigent fund and 1% to the poor fund, whatever is your revenue is. Moment you recognize any revenue, you have to park that amount for the philanthropy. What most hospitals do that they don't recognize the doctor services because they say they are our partner. It is not the services which hospital or charitable trust is providing. It is somebody else. So that revenue is recognized as a liability in a balance sheet rather than a revenue in the profit and loss account. So the hospital save a 2% of their billing, not going into this fund, part for the fund. So government regulations also push you for a innovative accounting so that you can save some amount. So that is also an important part for your revenue recognition. And most importantly, the accounting software, its maturity. In India, mostly we use Tally. However, like few have tried even SAP, which is not compliant with the service industry. So Microsoft has found an opportunity into it, and they have developed their Microsoft D365 as a software where they can work upon mostly for the services industry, which is a very apt software for any services industry. And we in our business are using it at all the location, at least out of 17 countries, we are using it 7. And we are migrating in rest of the country in next year will be complete with the Microsoft D365, which is a very helpful for accounting software. So I'll pass on this message who are from the healthcare industry at the moment. You can look at this accounting software and it will make your accounting very easy, and you can work upon a multiple dimension and you can get a data as per your need. And then now we have to look for the like if you look slicing the revenue into multiple parts. So you have like you can use the ledgers. You have to do the ledgers as apart from the ledger cost and profit center, parent-child relationship, subgroup, and group. This is very important and basic function which you should do at the day one when you are starting your unit. As you progress, realigning those things require a lot of challenges. So a proper accounting code, proper chart of account is very important. Yes, you can do it any point of time, but that is the challenging part and it will always keep upon improving. But as an accountant, I will give an advice to all of you is that look at your chart of account at very periodic basis, map it properly, and train your staff to use proper chart of account. And then basis that your revenue recognition will be very easy, and put it in your accounting as well as the hospital management system, the chart of account system, even for the store, etc. It will help you in recognizing the revenue in a proper manner and present your data for whatever need you are doing it for it. So in a hospitals, basically, you have to understand what is the segment of the hospitals. They cut their businesses. So hospitals nowadays, usually a typical hospital, a smaller one I'm taking first, will have mostly the OPD facility and an IPD facility. Pharmacy may or may not be there. Sometimes they outsource their pharmacy. So that makes life easier. You don't have to maintain the stock. You don't have to maintain the data for that, each invoices. And you can club all the invoices at the end of the day as a your revenue and the liability against that. So you have to do the matching concept. When you're running a pharmacy, life is little bit difficult because a lot of charge your SKUs are more. In our hospital, we use around 7,800 SKU for the pharmacy items. You have to maintain your batch number, expiry date, etc. Then it makes life difficult for an accountant when you are having a pharmacy, because SKU, expiry date, accounting method for first in, first out, or weighted average method, everything comes into picture, and it's a very complicated process at the end of the day. I'll delve upon it for 5 minutes more. Pharmacy indents are usually done by the nurses at their respective centers. They do not have the accounting knowledge. You have to train them. And same medicine comes and goes back 8 to 10 times, because medicine you have given it, the patient has not it goes back to the pharmacy. Again, the same item is used to another floor. Sometime it is not used, again it comes back because doctor has said, no, we want a substitute, it is not fitting the patient appropriately. The same item goes back and forth, and every time you have to map it appropriately. You can do it with the barcode. Barcode helps you on that. If you're not having that, you have a nightmare, really a nightmare. In that case, it will create more problem for you in the accounting. So typical hospitals, as I said, IPD, OPD, pharmacy, if it is added, then it mostly the mid-sized hospitals, they have this facility. And large hospitals have an emergency and ambulatory care, which is an emerging scenario in India, as you might not see in the typical mid-sized hospitals. It's a new field of medicine which is emerging globally. It's as old as a 10-decade old globally, and India almost, yes, same period. Few hospitals have adopted emergency and ambulatory care. So you have to do the accounting for the services which you are not providing in your premises. So there can be issue of the GST if you are on a bordering situation, bordering like states. So we fetch up patients as far as 600 kilometer. Our patients come from 600 kilometer for a surgery, and those are critical patients. And ambulance, which is as good as a hospital ICU, well equipped with ventilator, doctors, nurses. They go drive up to 5 to 6 hours, pick up a newborn baby, which is a premature baby, which is weighing around 650 grams, or some patients who are requiring emergency cardiac care. So then you recognize those revenue challenges of GST, everything will come up, how you bill it. So those is the emerging field. Even we provide air ambulance, airliftment, all those kind of are clubbed under emergency and ambulatory care. So then when you have decided about these 4 or 5 categories, you again have to create a sub-component. Then department wise, you need data for your analysis of a profitability of a department which you are operating, like department wise, cardiology, dental, imaging. So imaging, you have to create a parent-child relationship. I suggest X-ray, CT scan, USG, PET scan, MRI. More and more, imaging is a field which I have seen over a 2.5 decade has grown from X-ray machine, and every day it is changing. More and more technology is being developed. So you have to have a multiple sub-component, because capex cost is very high on this. The majority of capex will go behind this equipment, which is runs. You have to buy equipment. If you are going for a linear accelerator, it will cost you 12 or 15 crore rupees to set up. So a proper matching of the revenue on this is required for understanding the IRR of the equipment or business or segment. So if you club all in a single imaging, there is a problem. It's better to map each equipment, revenue from each equipment. If in hospital we have 3 or 4 relay escalators, so I want my revenue against each equipment map. So when you're creating an invoice, patient is coming to a desk and it is only booking a service. Invoice, at the point of invoicing, you do not know patient is walking into which room for that imaging. So when you are creating an invoice at the back end, when you are recording for the revenue of that, you should map for the equipment, and when you should, the person who is providing that care has to flag against the invoice which equipment was used. Then you can put that data into your accounting system, Ledger or cost center, or a Microsoft D65 dimension, and then you can understand this equipment revenue is properly from this patient's revenue from this equipment is there. You can map the AMC cost of that equipment. So it's a matching concept of the revenue versus cost. So that is desirable. So you have to have a proper HMS system, accounting system, which can do that. And as an accountant, you have to create a base at when you start this facility. So at that point of time, your expertise comes into fore. And when you can tell this to your hospital management system provider that I want to recognize my revenue against each item. You cannot recognize revenue which is against an item which is costing around a lakh or so, but major equipments like imaging, operation theater, critical care, you should develop a system of recognizing through equipment in your accounting system, either through Microsoft Dynamics or some cost center or some cost center method of tally or something. So basis that, then you have to cut through your revenue against basis on your cash flow type. So basically, four or five types of patients are there in a hospital, which is a cash paying, like anybody walking in paying cash. Then you have a third party administrators. If you have insurance, suppose you have bought an insurance, when you go to a hospital for cashless treatment, your third insurance company has provided you a third party administrator, and they will service your process your invoices and pay to the hospital basis the pool amount given by the insurance company. So you have to tag every revenue against that, because it is a basically AR, which is a outstanding, which is in the system. You have to process and map that. The corporates, like the company who are working, they like the banks, they have enter into tie-up with directly with the hospital and send their employees and pay basis the agreement. So all these, basically these are available in the small hospitals also. Big hospital, what you can do that, you can map your every processes basis that, and you can provide a credit limit also in your HMS system, so that if the limit is crossed, automatically it will give an alert, and your outstanding, your aging, etc. should come from the system rather than working on an Excel file. If you have a good HMS system, you should harp upon an automated system, not an Excel file, because most of the time you have recovered the money from the TPA. They will send you NEFT, but they will not provide you details against which bill you have received the money. There is a lag between 5 days to 15 months in getting an invoice which is cleared by the TPA company. So that is a challenge, which makes the account receivable accounting very complicated. So that you have to also look into it and provide a process where we can work upon it and recognize your account receivable appropriately. Otherwise, your auditor will ask for a provisioning. You've already, there is a accounts outstanding and the amount which you have received lying at two sides of the balance sheet, which is one is in receivable, other is in a as a liability. And the auditor will say, no, either you provide a provision for this, but you say, no, already I have received the money. Now, the losses, if you have received the money and you cannot match it for 6 months, that you have to report in your balance sheet and file a return with the MCA. A newer provision for advances is there. Sometime money which is not mapped, it will lie there. So there is a challenge there. Government program is another challenge. If like Ayushman Bharat or Rajiv Gandhi Yojana in police schemes, there are multiple schemes in every state, or Swasthya Mitra in West Bengal, but every state has their scheme, and most of the time hospital participate into that, and then payment will come a little bit later, quite later. So that creates a lot of challenges for that. Another challenge is that for your revenue recognition in a doctor wise, this is very important, because your entire profit and loss account, more than the 50% cost of goes on this. Your major cost, more than 50% is a doctor cost in a service industry. You want to know how your doctor is your asset as well as your the key for the business, and you have to analyze their revenue contribution, and that will help you recording of that revenue and matching those revenue against the cost is important. And if you, as you grow, your revenue should be on the unit wise, geography wise. If it in the multiple state, multiple countries, you have to record that, and that is important. So this is the process. I have just a typical scenario in India. Smaller nursing home, they go for manual invoicing through Tally software. So what they do typically, they smaller doctors who are operating say 20 or 30 bedded hospital nursing homes, they have their manual system of billing where they put an accountant who just do the invoicing for them, patient typically buys a pharmacy from outside. Samples is also sent outside. So typical thing is the doctor services and hospital services, and invoicing is done through a tally software. A smaller hospital, they have a billing software which only provides typical billing. There is a no much accounting data, no much what I said about mapping the equipment, etc. It's just nothing but a electronic typewriter where they can have a services defined, and a bill a printout is given to the patient. At end of the day, the system provides you listing of the bill which you can export in Excel, and basis the sum total, a JV is passed in accounting software for the all days billing. Every time a consolidated revenue is passed in a tally software. So this is for the smaller hospital. Mid-size hospital, they have a billing software and they integrate with their tally software. So every bills which is given to the patient with the help of an integration process, they recognize every invoice as a in their system, and cash whatever is collected from the patient is also recognized and maps in the ledger. So sometimes they have a consolidated ledger for all cash patients, and for the TPA and corporate there is a separate ledger, and they map against the new reference in the respective ledger. Basis that accounting is done, or AR and knockoff it happens at the time of payment, which is manually the accountant will recognize the AR. The problem over here is that also you have to do it in HMS. Otherwise, HMS listing and tally listing for the outstanding is a challenge in those kind of scenario. Large hospital who can invest into much on HMS, they can get sorry. Large hospitals who can invest into IT infrastructure and can get these processes appropriately. They have a integrated accounting system sometime, but that integrated accounting system is not mature as like a tally. It gives a very basic data relating to revenue. They put everything there, and users try to put accounting software sometime using there, or they migrate the data into tally also. So it's a hybrid process where some kind of trial balance will come from the HMS and rest of the things will come into they put in the tally. Or if there are certain companies also, they harp upon, there are certain HMS provider, they have understood the tally and backward integrated the whole JV, etc. concept into their HMS. There are very few, select 3 or 4 in India who provide accounting as well as HMS together. Otherwise, it's a typical HMS and accounting you buy, and they will only provide you integration of their process. Data will speak to each other, and you can basis your input. More input you provide, you will get more proper integration into your accounting software. But however, when you go for a very big, you are listed, it's impossible to work in this methodology. Manual billing, integration is not going to work. So what they do, they hire there are companies like Wipro, TCS, and other companies are there who provide HMS, and they customize and they integrate with Oracle. Oracle is very useful if you are listed, because data size will be quite bigger. MS SQL poses a challenge. It becomes, because when you run a report, it becomes quite slow. My experience with is that Oracle is better for the data, and for HMS, if you integrate SAP or Microsoft D365 is the most appropriate. Now apart from this technicality, I will take you how the accounting system usually happens and what will be good for you. As I said, there is no accounting standard. If you ask me what should be my accounting standard in this industry, maximum 3 method we can think of hybrid of this, or this independent. I'll take you through what these two are: subject indent method and closed field method. Typically in HMS, I'll first give you insight how it works. Your revenue is not done by your accountant. Your 60% of revenue is done by the nurses. 20% is done by your pharmacist. The rest 20% is done by your front office executives. So, and your majority of the indents are provided at the bed care. point of care. So nurses wants any medicine, nurses want any services, nurses want even the services of the doctor is posted by mostly the nurses, or there is a, we call it patient care executive. So or they provide the rest of the entries apart from the medicine, because medicine is only indented by the nurses. Other services are posted by sometimes nurses, sometimes by the patient care executives. So they are your person who will do your accounting for you. So whenever a patient needs like a pathological test or medicine or any services of doctor, or going outside the hospital to for the blood, etc., whatever. A service when it's called indent. When you indent that service, basis that a service is provided and flagged off whether service is completed or not. So a service has a multiple layer. First is the service indented. Then either you have to assign an item or assign a service. If an item like medicine or a blood, then immediately when you take it from the stock, you flag it off. Yes, it has been received. Then you have to administer it to the patients. So there are different touch points, and accounting is a different touch point is different. So when into indent, no accounting is done. It's only an indent. Accounting is not done. When that item has issued, yes, a liability to the patient is made. But whether patient has consumed or not, responsibility of accounting arises at that point of time. Till that time, it is an item which is in a suspense. So you have to recognize, some hospitals do not recognize as a suspense. But the best practice is that indent it, issue is parked into a suspense. When it is consumed by the patients, because a medicine which you have issued, patient will be taking at a 12-hour interval, 6-hour interval, or in a single tablet in a day. When you provide that service, if you have an integrated medical record system, you can have that touch points. Your liability arises at that touch point. If you do not have a medical record, you can bill it, and liability for revenue or your revenue can be recognized at that point of time. If you have a crisp HMS system, those touch points will give you different accounting process, and it is useful. You can recognize it at appropriate level. Suppose patient says medicine has not been consumed, and patient all in a sudden asks for discharge. Patient, you cannot stop a patient being discharged. They can discharge at their own will. It is called discharge against medical advice. You have already built a 10 item, but at that point of time, you have to return. So return process is easier at that point of time. When you have a touch point of when it is consumed, basis that when you recognize at the basis of consumption, you can discharge a patient any point of time. If you do not record it at that in your HMS system is not capable, there is a delay in discharge. That is the reason. Most of the time, people complain discharge is taking too much of time. It is because of the delay in recognizing the revenue. If your revenue is recognized at every touch point, and you have a very crisp system, discharge should not take more than 30 minutes. The typical process, it is from 4 hours to 6 hours in India. It can be curtailed to 30 minutes if you be as an accountant, provide a proper methodology, how when it will be recognized, how the process can be curtailed. If basis the consumption basis, it is always useful, but it's a little bit complicated and it requires a lot of IT investment. Coming back to the service indent method, a service is provided and it is recognized. Yes, it has been consumed, then you're recognizing as a revenue. So what is so your HMS will list all indent at the end of the day. So either you can recognize is online basis, like what we do, we recognize on everyday basis. Our system is online. Moment a service is provided, it goes into my account book immediately. There is a lag of not more than 3 minutes. Not more than 3 minutes in every services, and my account book is updated. My idea is that I must get an balance sheet end of the day. Right now I'm getting at the end of the day. My vision is to get a balance sheet on the 6 hourly basis at the first go, and then hourly basis. There are few hospitals who have achieved and they get the daily data because their revenue recognition is so crisp and absolutely foolproof. So indent method basis, only with indent method basis you can achieve that. Closed bill method will not. You will never be able to achieve that. So indent method basis, you get all the indent at the end of the day, and there are cancellations. Sometimes doctor provided service patient is not capable of doing that. We see it in the cancer care. In cancer care, doctor advises certain tests, but with the chemotherapy, the vein of the patient becomes so stiff, you are unable to draw blood. And that point of time, doctor say, okay, let's wait. I'll do away with this test. There's another method. So there is a maximum cancellation happens in cancer care. So if you go for the indent, you have to map your cancellations also. Your hospital system will give an indent listing and cancellation listing, and those are mapped. And net of that will go into your books at the end of the day. That basis, it is very useful because it's the services which you have provided. However, when you get an invoice, a patient gets an invoice because this is indent, and your invoice is a sum total of all indents. When you typically walk in and get discharged from a hospital, if you look at the invoices, there are two set of papers. One is a summary bill, other is the detail bill. Summary bill is classification under different heads, and detail bill is nothing but all the indents which has been provided for the services are listed in the detail bill. So, and it is net of the cancellations. It includes all kind of services, all kind of item which you got from pharmacy, lab, doctor services, everything is listed there. And some hospitals provide the cancellation separately, and some only provide the net. A transparent hospital will provide a negative item all the return item as a negative and positive both, so that there is a process. Patient should also know what services has been indented but not provided. So that is a good practice. Some hospitals only provide net of services, which is actually billed. So your revenue recognizes is net of it. And your disclosure also, if you're going for proper disclosure, in my opinion, both should be on the invoices. So final invoice is generated, which is a sum total of all the indent plus and minuses. Under the closed bill method, it's nothing but the summary bill at the end of the day when patient is discharged. You are recognizing revenue at that point of time. Till the time patient is admitted, there are patients I have seen which are there in the hospital for a year, more than a year. I have seen few patients, and they were discharged and they walked out of the hospital after a year, healthy. So, and in between, there were two accounting period which you have to recognize those revenue. Under closed revenue method, there is a challenge. How do you recognize that? The solution is that end of the month, you have to get us all the listed of all services. All the patient was discharged, you recognize as a revenue. And end of the month, on midnight, you have to take all the listing of your indent plus and minus and recognize it as a work in progress. So you have a work in progress at the end of the month. Next day, you reverse that work in progress. Again, at the end of the month, again you record. So your all the bills plus opening WIP and closing WIP adjustment is your revenue. However, if your system is not working on that midnight, if there's a system crash, if somebody has not run that report, all these challenges are there in this method. Sometimes HMS does not provide the data and there can be challenges on that day. There's a virus attack. I've seen a virus attack on the 31st March and then it took a lot of time to readjust the processes. And then doing it manually took us a lot of time, lots of time to reconcile that revenue. It was a challenging situation. So services indent methods, you are updated, you can recognize your revenue on the go, and that is a method which one should adopt. Majority of the hospitals, they go for the closed bill method because it's easier, because every adjustment bill is closed, handed over the patient, you can recognize the cash, and then the balance amount is recognized as the AR. So, and then that bill is also recorded in the tally software as an outstanding bill. So that is the process. It happens in most of the part of India. So recognition of revenue, these are the challenges. Improper HMS. If you are not fully baked HMS, the life becomes a little bit difficult. Even your processes are complete, but your HMS vendor cannot provide you multi of the information. Your revenue recognition, only basic ledger you can create. You'll not be able to do the cost centers or the mapping of the parent child. It creates a lot of challenges. Multiple software for transaction like billing, stores, accounting. Then reconciling of data is a Herculean task for your team. It's very challenging task. Auditor will ask something at the end of something will pop up and during the audits. Then you have to convince with the set of data that data is not available. Both the system is not talking each other. There is a problem. So multiple software is to be avoided. Have as less software. You can go for a complete HMS. If you're working on Tally, try to integrate. Then another challenge is that multiple tariffs. Multiple tariff is that not only the cash, you cannot have only cash tariff as a tariff in the system. There are TPAs, there are insurance companies, there are corporate, all those things are there. So there is a challenge there. Auditor will say, I want a data, how much discount you provided at the end of the day. They want to map all the revenue, etc. Well, you have a big four there. They ask for multiple data on it, and there is a challenge on it. So if you have, but you cannot do away with that. You cannot run on a single tariff. Your marketing team will say, no, this company, if you have to go, we have to provide that discount. My suggestion is have single tariff, but not more than 3 or 4. Convince your marketing team. Will agree on the discount at the end of the bill rather than multiple tariff. There can be it makes life easier. If you have multiple tariff, say 40 and 50, there was a problem. We had faced problem in our system. And now we have only single multiple tariff of 4 or 5, all location, all 24 hospitals, single tariff. And rest of thing is adjusted according to discount. We have operating hospital in tier 1 city, tier 2 city, tier 3 city, but tariff is similar. We have kept our tariff now similar. Everything is discounted. If tier 2 city is there, discount will be provided like a cost of living of sort of thing. Different rates is there. It has made life easier. And the challenge is availability of trained staff. You'll not get trained nurses, trained staff in the front office, and a higher attrition rate is there. Nurses, 50% of nurses in our hospital, they move on a year. So by the time your system is stable, another batch has come, everything goes for a toss. That makes revenue heavier. Unless you have a very crisp HMS system, very training processes, and have an eye on this, your revenue will be always in a doldrum. There can be a challenge always there. And then owners, hospital owners, they think, okay, why should we invest into IT system or accounting system, good accounting? They say, okay, Tally is working. Why can't we work on the Tally, continue on the Tally? Why should we know the integrated HMS and a separate accounting? Why should we invest into SAP? Why should we invest into Microsoft D365? Or because those come at a price and those are costly. Basis that if you have to convince them that this investment is going to help every stakeholder. Once you invest into it, you can cut through your revenue, every processes properly. You will provide those information to the management. Apart from that, work culture and dependence on external factor. What I said, the management is keen to get this data. If that work culture is there, you can get through your things. Apart from the competition, you are happily doing your accounting, very basic one. All in a sudden, there is a competition around the area. Your revenue is depleting, your people are leaving. Then you are forced to get more data. Then you will say, okay, let me see which department is working or not. At that point of time, those adjustment of cost center all in a sudden, they try to do it with the Excel sheet. चलो Excel से ये निकाल देते हैं, अपने से 4 field डाल के इसको कर देगा. That is not there. If you have created and you have visualized that some point of time there will be challenge, even you are enjoying a monopoly, you should prepare yourself for a situation where there will be challenge, because this is a very challenging industry. It's a growing industry. This is still every nook and corner. There's bed and ratio is very less in India. Patient bed ratio is very less with the population. It's still newer hospital. You put 3x of hospital, still we will be lagging because our population is also still growing in aging. So even 4x, 5x of hospitals will not fulfill the need. So every time across the road, you will see a hospital. So all those challenges make your life difficult if you are working and you are complacent and you are working with the basic things. Suggestion is that prepare yourself for next 2 levels up, 3 levels up. Think for that, not for the next level. Think how you can go up to the 3 or 4 level up and prepare everything. Then competition, you will be ahead of the competition. situation, and then invest into those people, infrastructure, IT infrastructure, training, and accounting, and your HMS. This industry is ever evolving every time. All in a sudden, there is a lot of challenges there. Who know COVID will come? Who know what will challenges will come? In COVID time, we were not prepared. A lot of dynamic things. It's ever evolving. Newer team equipments are being invented. When I started my career, only MRI machines were a new, only the big thing. Now MRI machine is all across. Newer things, the PET scans are there, high-end machines are there. So it's very, you have to do juggling every time. Even machine will run for 7 years, but a doctor say no, I want to a newer technology. You have created a IRR for 7 years, but you have to replace the machine in 3 years. You're accounting everything, depreciation, everything. You could be ready to adjust your depreciation any point of time. So those data sheets required all in a certain, all this data related to capex, revenue, because if you're cutting off any equipment, replacing your revenue, everything will change. Pricing structure will change. Now, every mapping need to be done quickly. All this is required. Now, more and more PE investment, more and more IPOs are coming in this industry. There's a lot of headroom. So if you recall, and everywhere, revenue is the key. Whether you go for the listing or your private equity investment, they will look through only the revenue. If you have a very detailed, crisp revenue, you can get Series A, Series B, Series C funding. Otherwise, you'll be struggling with Series A only for years and years. They will ask for data, and they will, because if they have the money, they will go for a company who had a very good data providing all this data. So revenue recognition is very important at that point of time if you're looking for this kind of investment or looking for this kind of growth. Awareness, apart from that, COVID has given a lot of challenges to us. Apart from that, it has given a more opportunities also for this industry. With the help of COVID, electronic medical record is being recognized, electronic billing submission is being recognized. Earlier, it was not there. The government is very keen on this industry. Common public awareness is more on this industry. So there is more and more data being required now. More and data is being sought for the policy decisions. The cost audit is applicable to this industry. The cost audit is also a challenge where revenue is important. So if you have apart from your basic accounting, you have to provide a cost audit data, and government sometimes demands many data in a forum, and they want data related to your doctors, even your revenue have to map with the diseases, etc. So it is called ICD-10 in US. They recognize every revenue with a disease. Every single invoice is mapped with their code disease. They call it ICD-10, which is an old, now newer version has come. So understand, in India, we have not yet followed. Our hospital is capable of doing that. So we recognize everything for the every revenue, apart from mapping with the equipment, we map with the disease, with the international level of ICD-10 codes. So now I'll take you through the second part. I think I have another 10 or 15 minutes.
Neeraj will be having 5 more minutes. We'll have to wrap up. Yeah.
Yeah, I'll wrap it up. So I'll run it fast. So these are the basically typical role an accountant. When you're an accountant working in hospital, this is your role: GST audit, healthcare, term loan, etc. And these are basically when you are looking for the financial management. These are the keywords which will pop up on your day-to-day discussion, like petty cash, PPA, cash flow. So at the start of the hospital, capex is a challenging task. Loan syndication you should be working upon. The kind of technology we are investing, you can guide the management to invest. Go for better equipment. Go for a better even you have to get better even higher loan. Invest into better technology in imaging, at least, because that is the future, and operation theater. Basis that you'll be able to drive doctors. If you're missing on this, you'll not get to doctor. So you, as a accountant, you should factor the technology into your project report rather than what has been told by the management. Go and analyze if higher equipment everywhere, every time when I have prepared a project report, what has been given to me, I've looked for a better technology and then say, no, we should raise our project cost by this I'll be able to get a better loan from the bank, and this IRR is little bit higher. But in long term, it is beneficial. Your hospital will break even earlier if you have a better technology in imaging and operation theater. So that is the role you have to play and tell the management, yes, that is at the point of capex. Then the recovery is a problem. Cash flow, because it's a majority of the insurance company, their money will be stuck from not less than 5 months to 15 months, and the government agencies. So your working capital is a challenge. Managing cash flow is a challenge. And the problem which is there, everybody wants business in cash. With a doctor, they are very happy if you pay them cash. Patients want refund in cash. And a lot of challenges on making payment more than 10,000 or digital payment or reporting, SFT returns, etc. All those challenges are there for your day-to-day financial management. These are the typical things which you will be working on. The financial management is depending on the small, big size hospitals. As you grow, your life will be easier, but in the beginning, it depends on the life cycle of the business. A newer hospital has a more challenge. Like first, and then you can cut it into 3 or 4. If I take your period of hospital of 5 years, so pre-inception, when you are working on the project report, that is a different challenge. Tying the loan is a different challenge. And then what happens, in order to, there will be 3 or 4 months where there will be, you have to hire a staff, because inspection will happen for the licensing of the hospital. At that point of time, you have to be full force hospital. You have to hire all nurses or employee, then only inspection will happen. So there will be pre-operative cost. You have to provide cash flow. If you're missing that component in the project report, there's a challenge. Or if you're missing that component in your cash flow, there's a challenge. All in a sudden, you will be all, why you have not seen this? Basis my experience, I'll say different states have a different time frame for inspection and approval. Like Maharashtra takes longer than Andhra Pradesh and Telangana, where we operate. Maharashtra, we have seen there is a challenge in getting a licensing. So I factor more cash flow at the for the launch of hospital. And after you have started a hospital, there are 2 things you have to work as an accountant. Then you have to get an exemption under 17(2)(1)(b) from the income tax department. Basis that you will be able to tie up with all the government companies. And 17(2)(1)(b) exemption is very important, where chartered accountants play an important role. Another is that NABH accreditation, which only happens after 1 year of your commencement of business. So after 1 of a year of business, only you can enter an insurance tie-up. So once you get a NABH exemption, your pricing will go 20 or 25% higher. So basis that your revenue will be more. So these 2 factors you factor in your day-to-day cash flow and your project report. That 17(2)(1)(b) exemption, if it is a longer, you'll not be able to tie up with the insurance companies and the private government companies also. NABH will, if you're geared up, if you can achieve that in the first year, your pricing will be better, more revenue, and you can get that. So these 2 things will drive your cash flow situation. You have missed it, there's a challenging situation for you. Data should be available for the recovery. Account receivable is a really challenge in healthcare industry. It is a like your team and you as a financial controller should be live with it, sleep with it, eat with. You have to eat it. Everything. It's like your day-to-day situation. Work on a MIS system which gives you data on as fast as possible. In our business, we get it on our basis. Whatever amount we have recovered on cash, card, and from the TPA, my system gives me data on mobile app as per my wish. It is updated. So we have geared our system like that. So if you can achieve that, life will be easier for cash flow. Otherwise, it's a really challenging situation in this business. Everything is going good, all in a day. There's a competition across the road. Your salary cost will increase by 20%. Your cash flow will impact that by that. And in that situation, your business are did by 15-20%. So you have a double whammy on a cash flow situation. So always factor that and be prepared for that. So that is they have understanding that okay, initially we break even will be there and will be time will be more, and they take your nurses with 50%, 100% pay raise. That challenges will be there. So this is a very typical business where cash is the king. If you can't manage the cash situation, there will be difficult situation. I've seen hospitals that are going into NCLT all due to this, and then they come to us for purchase and we turn around these hospitals. So due to you can have a best doctors on the board. Unless you have a best accountants, hospital will never function. So you are the key people who can drive this business. You have to act as a driver rather than working on the backseat driver. You have to sit on the front of the car, not on the backside. You have to drive the entire business. You can drive the cash flow situation, drive the hospital, and you can. There are challenges based on experience. You can learn more and implement more. That is the thing. So, I see can I sum it up?
Yeah, yeah.
We are,
Yes.
or do you want me to take questions?
There is no question as such. I think your explanation was quite crisp and clear. You can just sum it up. So,
So, basis that I can say that this is a very dynamic industry. Revenue is the core, and require a lot of thinking, innovative thinking. Basis your infrastructure, invest on infrastructure, invest on people training. Basic revenue can be done. It's not a challenge, but more crisper, it will give you more advantage. If you're looking for P listing, P funding, or IPO listing, you should work at least 2 or 3 in advance. Otherwise, it's a challenging time. Thank you.
okay. Thank you so much, sir, for your enlightenment knowledge that you have shared with us. And definitely, members are going to, it is going to be very helpful for the members to recognize the revenue, also to manage the funds in case of the hospitals. Also, there are few points that you have explained us very well, like, cash is the king, definitely in the hospital section it is. Also, you have explained us that we need to go through the cost audit section as well. So, to, enlighten us with the topic of cost audit and GST for healthcare industry, we have Amit Siode sir with us to give a brief about Amitji. He is a bureaucrat as well as cost accountant and a lawyer who is specialized in the indirect tax litigation and advisory. He has served as a deputy commissioner since 1995 to 2008, deputy commissioner appeals in the Department of Representative before President, uh, Maharashtra Sales Tax Tribunal. He has argued around over 3,000 plus cases in the tribunal. He is the only officer in the department's history who has been appreciated in the judgment by President Tribunal. He is currently working as self-employed in his own firm as named as AS and Associates. Over to you, Amitji.
Thank you. So unfortunately, I happen to know that I'm speaking to all of you day before yesterday, so I have not prepared any PPT. By whatever points I have taken out around 20-25 points, and I would be speaking on those 20-25 points. First is I'll be speaking first on GST on healthcare services. So far as healthcare medicines is concerned, they are covered under pharma. And since they are covered under pharma, it is an entirely different aspect. And I'm not touching that aspect. I am limiting myself to healthcare services. Now, what does GST say about healthcare services? It says that the healthcare services are not taxable, but this exemption doesn't cover hair transplant or cosmetic or plastic surgery unless it is undertaken to restore or reconstruct an anatomical or functional defect caused due to congenital or developmental abnormality, injury, or trauma. So if a treatment is purely cosmetic, then it is liable to GST. All else healthcare services is exempt. Now, this particular concept has undergone a change in last year. Last year, the government has introduced tax on healthcare services. Now, what the government proposed is, and they have implemented, of course, is that if you are charging rupees 5,000 or more for a hospital room per day, then whole of the medical charges shall be taxable. Kindly remember the charge or the levy is brought through the key words are that 5,000 rupees per day for a room. Now, if you see the notification, you will see that the particular notification levying tax at 5% on this medical services is a conditional notification. Now, what is a conditional notification? A conditional notification is a notification which can be availed subject to following some conditions, and the condition specified in this case is that you shall not be eligible for input tax credit. If you wish to pay tax at 5% on the healthcare services given where room rent is above 5,000, then you cannot avail the corresponding input tax service. So this is the key. This thing in, especially given the costlier hospitals these days, most of them must be charging more than rupees 5,000 as a rule. I mean, I've seen, I live in Pune, I've seen many centrally air conditioned hospitals and having room rent across the board over rupees 5,000. So in respect of such hospital, what should be one do? Should it opt for 5% or should it opt for paying tax at the full rate of 18% and then availing ITC? Now, this is the area which requires some planning. This is the area of tax planning and perhaps also litigation, especially litigation in respect to water billing the hospitals have done vis-a-vis packages that they have offered. Because when one offers a package, obviously the package price is less than the total price otherwise chargeable to that particular treatment. And if in such package, the room rent happens to go below 5,000, and if your system is designed to only charge tax where the room rent is 5,000 and above, this is going to be a problematic area, especially since it is quite difficult to convince the tax authorities that due to package this particular thing has gone down. So one has to be very clear. One has to be very clear as to how the revenue has been apportioned in the tax package, in the particular package. And unless it is clearly demonstrably below rupees 5,000, one should not opt for tax exemption. One should not claim tax exemption, or otherwise there might be an element of litigation or tax dues involved. Now, so far as pharma is concerned, that is the medicines, they are obviously taxable, and the issue involved in the earlier regime was the payment of sales tax on these particular medicines when administered during the course of health treatment. Now, this particular aspect was ideally quite clear following certain Supreme Court judgments. However, most of the governments were insisting on making payments on that particular portion of the turnover also. However, with the advent of GST, given that there is a concept of composite supply and healthcare service being the principal supply, now mostly whole of the things comes under the concept of healthcare service, even if you are giving certain medicines as a part of that service. Now, in sum total, I may summarize that these particular medicines, when given with treatment, won't be taxable if the principal healthcare service is not taxable. If the principal healthcare service is taxable, then obviously these medicines too would be taxable at the same rate at which the principal service is taxable. That is 5% or 18%, to which one opts for. Another aspect of this issue, which has a bit of history of litigation, is the fact that since while issuing the DPCO, that is the Drug Price Control Order, sales tax is considered as a part of price. The claim of exemption is often challenged by the authorities on the ground that you are already charging MRP, which includes tax. And now you are trying to say that you are not exigible to tax on whatever grounds. Now, this area has been a matter of litigation, and it is still in Bombay High Court. Coming to costing and cost audit aspect of GST, the main aspect that cost audit covers under indirect taxes is the reconciliation of taxes collected and paid. So far as the hospital industry is concerned, since overall till last year everything was exempted, so there was hardly an element of reconciliation involved. However, after the introduction of tax, there would be an element of RICO, and that RICO obviously would be in understanding and reconciling the tax collected vis-a-vis the tax paid, either through the cash ledger or through the input credit ledger. Now, I suppose there is hardly anything else that I can speak on GST on healthcare. If anyone has any questions specific, I would definitely take those questions after whatever I want to say on cost audit. Now,
Amitji, as of now, we don't have any questions, but I'll let you know if there is any.
Yeah. Now, coming to cost audit, I like to introduce this subject on by posing WH questions. As to first, I will say why cost audit, because ideally cost audit is a concept which is integrally related with manufacturing industries. Then why it should be brought in for a service industry, and that too like a hospital industry? Perhaps I believe the reason is that the government is attempting to gather data in respect of its certain social goals that it is trying to pursue. And one of the social goals is health. Health for all is a social goal of the government. And in order to have a better understanding of the cost involved in achieving that goal, they have introduced this cost audit. Similar audit has been introduced also for the construction industry, mind you, because another such social goal is to provide housing for all. So coming to cost audit, or rather costing in a hospital industry, because cost audit is just a tabulation and presentation of costing data as reconciled with audited financial data. So the most important challenge while trying to understand the costing and the costing processes of a hospital is to define the capacity. Now, how one is to define the capacity in a service industry is often quite challenging, especially since the hospital is a combination of two different type of services. One is an accommodation service, which is given in respect of inpatient departments, inpatient department patients, and the other is provision of medical service. So, from my perspective, I like to see IPD patients as availing service of accommodation plus healthcare service. Secondly, while defining the capacity of IPD, I the most appropriate measure of unit of measurement, as per me, is bed days. That is number of beds multiplied by the number of days. The total capacity is defined in terms of year into the days in a year into the number of beds, and the actual utilization is based on the actuals. Now, second important aspect in cost audit or costing is to define the cost objectives or the cost objects. Now, in defining the cost object, one has to decide on what basis the costing data has to be compiled, and that particular compilation has to have a logical and measurable relationship with the revenue, or otherwise, whole of the exercise becomes more or less theoretical. Especially this particular challenge is more visible in case of OPD, because in OPD, defining the cost objective itself becomes a very challenging exercise. Overall grossly correct method of compiling data would be to aggregate the various expenditure items vis-a-vis the different specialists that the hospital has employed in its OPD, and thereafter trying to define the standard time required for treating a patient or for consulting a patient, because this particular aspect helps one in defining or in measuring the capacity. Because if say one has got 4 or 6 specialists sitting as an OPD in any given hospital, how is one supposed to measure the optimum working of the particular OPD department, or for that matter, a particular specialist in it? The only way to do it is to define the optimum time that may be required to consult a given patient by a given specialist, and depending on the facts of the particular hospital, defining this on a yearly basis based on how much hours in a day the OPD is working. Coming back to IPD, what is the ultimate objective of cost compilation and cost allocation in IPD? The ultimate objective is to define what is the cost incurred per patient day, and what is the effect of capacity utilization, higher or lower, on this particular cost, because as we all of us are aware that the fixed cost would go down with the higher utilization. Now, this particular exercise would need a very detailed analysis of direct and indirect costs associated with all types of beds that are in a hospital. Because in an hospital, the beds itself are of numerous types. For example, the beds are based on the type of occupancy, that is deluxe room, semi-deluxe room, ordinary dormitory room, or it might depend on the number of patients that are there, that is single occupancy, double occupancy, dormitory occupancy. Then again, it may depend on what are the facilities that are attached to the bed as such in terms of the medical care perspective. That is whether it is an ICU bed or whether it is a semi-ICU bed or whether it is an ordinary bed. Now, taking into account all these factors, one has to accumulate costs per bed, taking into account all the cost incurred, direct and indirect, because so far as direct cost is concerned, it is pretty easy in associating it with a particular bed. But when it comes to indirect cost, it becomes very tricky, especially since what should be the method of allocation of the indirect costs. Then, having done all this exercise, one can come to various ratios which may help to better understanding of the exact nature of a cost involved, and what should be the optimum level of costing and pricing involved in a given hospital. Because once we make this particular exercise, it becomes very easier to analyze it thereafter. However, I'll again reiterate that it is easier said than done, because as a cost accountant, I have found the terminology used by doctors very difficult to understand. And given the difficulty in understanding what they are saying, it is very difficult to understand the nature of expenditure and the exact interaction the expenditure has with the uh, with the treatment as such, in order to understand what should be the method of allocation, or for that matter, in deciding whether the particular cost is a direct cost or an indirect cost. In fact, the difficulty is so bizarre in certain cases that it is difficult to associate the cost itself to certain treatment. Anyway, the key portion in cost audit or costing in an hospital is to understand and charting the various processes that are involved in the process, and trying to and attempting to map the cost involved with these processes. Because ultimately, in a cost audit, not only one can stop at this mapping, but one has to ensure that this particular mapping reconciles with the audited financial accounts. Now, this particular aspect has poses another set of difficulties, in the sense that not always all the financial heads truly represent the rather truly and correctly represent the exact nature of costs that are booked under that particular head. Now, this particular exercise also poses a lot of issues, because depending on the requirements of fiscal laws, most of the accounting heads are defined in the way they are defined, but this particular definition many times doesn't go properly with the costing requirements of the thing. And therefore, one has to simultaneously try and map the trial balances account head with the costing heads. And this costing heads to the particular treatments that are ultimately associated with the IPD beds. And this is all that one can say about the cost audit in a hospital industry. Of course, there are certain other costs that are also involved, such as cost of pathology, which I suppose mostly they are directly billed to the patient. Then there are physiotherapy costs, psychological counseling costs. Now, whatever has been ultimately billed to the patient is comparatively easier if it is directly billed vis-a-vis the cost center. However, in respect of indirect cost, one has to undertake the exercise of allocation and apportionment, which I was speaking of. Yeah, anything else what I may add to it, Mr. Gupta?
Amitji, I think it was well explanatory, and we don't have any questions as of now.
Yeah.
Do you want to sum up anything? Or yeah,
To sum up, what I would say is the most important challenge in establishing a costing system and a cost audit of an hospital is to ensure that there is proper documentation of the processes involved in giving healthcare. Now, once this proper documentation is done, it is comparatively easier to map the costs involved with these processes. But however, so far as I have seen that in India, actually the concept of cost audit on services itself is a pretty new concept. In hardly 7 or 8 years have gone that cost audit has been introduced, and especially in hospital industry where the medical jargons are typically very difficult to understand. The understanding the processes itself is a huge challenge. And then going a step further, understanding the cost involved in with the processes. And if this particular thing is not properly recorded, or if the proper person interacting, point of contact interacting with the cost auditor doesn't quite understand the requirements, it becomes all the more difficult. However,
right.
what I may say is, about a year or two back, the ICW Institute has issued certain guidelines. However, again, when it comes to guidelines, they are always a bit theoretical, and coming to ground level realities. For any person who wishes to establish the costing system or cost audit in a hospital industry, one has to first sit with the guidelines and with the person associated therein, so that the particular cost can be compiled in a particular way that may help in costing, in accomplishing the costing of records.
Absolutely, Amitji. Medical industries and their technical jargons are really tough to understand by a commerce background people. And thank you so much, Amitji, to give us an highlight and enlightening us all the members to the cost audit and GST for the healthcare industry. Thank you, Neeraj also, to help us understand the revenue recognition and the financial management for the hospitals. Uh, Thank you, everyone, to participate in the webinar. We are really thankful. Um, this is how we are closing. Thank you so much. Thank you, guys, to participate. Thank you.
Thank you.
Thanks a lot.